If you're just joining us, I'm Tim Bartos. This is my guest, Amy Aldrich, with Aldrich State Farm in Glenville, New York, and we're talking about insurance today. So if you have any questions regarding any type of insurance or a comment, please let us know. We'd love to hear from you. We're waiting to hear from you right now. We're in the CBS 6 studios on Balltown Road in Niskayuna. Right here is how you can get in touch with us. Chat at cbs6albany.com. That's via email. If you're on Facebook, you can Facebook us a question. And if you're on Twitter, you can tweet us a question. But we'd love to hear from you. We're talking all about insurance. So, all right. Now, was there anything else that you wanted to say about that?
I think
or are we
we've
ready
got that covered,
move on?
unless there are any questions.
We'll go on to another one here. My next question is, what should be considered when it comes to managing risks, for instance?
Okay. A lot of different things. I think most importantly is know what your coverages protect.
Okay.
That's important, and a lot of people don't seem to know what it does for them. Put together and update an asset protection plan with your insurance professional. And to me, as a business owner, it's like a business plan. You have to make sure that it's meeting your needs, and it's flexible so that if things change, your goals change, your situation changes, your insurance protection plan can change as well.
Sure.
So when it comes to auto insurance, make sure that you know what liability covers for you. There's bodily injury liability and property damage liability, and what you want to do with that is protect your assets so that your insurance carrier pays out and you don't have to. All right? And just for example, you know, speaking of changing situations, cost of cars change.
Right.
Some people have the same coverages that they've had for 20 years.
Right.
And from a property damage standpoint, if you slide through a stop sign and you total a car today, and you have $25,000 worth of property damage liability, your company's going to pay that $25,000, but if it's a Mercedes, who's in charge of the rest?
Right.
So, you know, making sure that you evaluate and do
Sure.
things like that.
Well, how often do you recommend reviewing a policy?
Well, you know, you can review it as often as you want. We tend to invite our customers in once every 18 months, 2 years, and they can choose to do it or
Couple
not.
of years.
But I would also say do it anytime you have a life-changing event, Tim, and
Okay.
that's a good point. If you retire or
Yes.
just before you retire,
Okay,
take a look at
okay,
that. You
right.
might want to change your commute. It would
Sure.
change your commuting
Sure.
rating on your auto insurance.
Right.
If you change ownership of assets, or if you gift things, or you put your home into a trust, or you know, gift it to
Right.
your children,
Right.
you need to visit on that. If you lose a loved one, certainly, especially a spouse, you need to reevaluate your insurance. And any other life event, remarriage, anything like that,
Right,
you need to,
right.
to look at making sure you're up to date.
Exactly. No, that makes sense. Well, you just mentioned if you lose a spouse or something, you might, in some cases, now become the sole driver, the only driver of
Right.
the vehicle, and that may change the cost of the insurance.
Absolutely.
Right. So,
Absolutely.
very important point.
Yeah. From a homeowner standpoint, you know, just make sure that you've got everything covered that you need to. Proper insurance on your structure. We've all been through Irene and Lee recently, so if you feel like you need flood insurance, or there's an optional coverage called backup of sewer and drain that helps if water comes up through your pipes. You know, if you have valuable personal property that you want to insure separately, and make sure that's covered. And then I'd just like to touch a little bit on life insurance
Sure.
and some of the health insurance. Typically, life insurance, and this goes to the question that was sent in earlier, it's a very quick, typically, way to pay your beneficiaries tax-free money that won't go through probate, and it can help with things like funeral expenses that come up immediately, or end-of-life medical bills that may or may not be covered, or even estate taxes, and a lot of people don't think about that aspect. Also, if you have something called never money, I call it, that
Never
you know,
money.
never
What is
money.
never money?
Never
I
money
haven't
is
heard of
money
that.
I don't need in my lifetime.
Okay.
A very quick way to make that multiply for your legacy is to purchase a life insurance policy.
Okay.
And build that amount
Okay.
very quickly.
All right.
The other thing is, just briefly, if you haven't retired yet and you have a pension,
Yes.
there's a really good concept pension maximization is an easy way to phrase it, but how much is that reduced pension going to cost you if you want to cover your spouse?
Oh.
All right, something to think about. And what happens if your spouse predeceases you?
Right, right.
Unless you have a pop-up, you may still be taking the reduced amount.
Oh, now when you say pop-up, could you explain that?
Absolutely. Sometimes when you take a reduced pension, if you or your spouse passes away within a certain period of time maybe, then you get to pop that reduced amount back up to what your maximum would be if you just took it to cover yourself.
Okay.
So, but if you don't have that, then you're living on a reduced pension for the remainder of your life, which may be 20 plus years.
Right.
If your spouse predeceases you. And then the other point is, what happens when both of you are gone? Does that pension go on?
Right, right.
You can cover that gap with a life insurance policy.
Oh, you can? You can.
Absolutely.
A lot of people, I'm sure, don't know that.
Absolutely.
Huh.
So something to check into.
Absolutely.
Long-term care, I'm sure, is very close to your heart too, Tim.
Yes.
And that is something that, you know, you're protecting assets. Long-term care gives you a choice. It gives you a choice of where you want to receive your care, whether it's in a particular facility or in your home. It also helps you protect your assets from being taken if you don't have a way to private pay, and be able to pass that along to your children.
Right.
And sometimes it's children who buy the long-term care policies, because ultimately they're going to be the ones with the financial situation in the end.
That's right. Very true.
So,
very true.
Yeah.
Huh. So certainly that's something that people should take a look at.
Absolutely.
You know, the earlier the better. And that it can be very, very important, as you say. It certainly is. It's near and dear to my heart with the work that I do. That's right.
Absolutely.
Well, gosh, thank you for sharing that.
Yes, you're welcome.
Now, we were just talking a little bit about estate and legacy planning, and I know we were chatting a little bit before we went on air here, but I mentioned during the segment that it's not necessarily a good idea to buy life insurance policies, and I mentioned a couple. I mentioned a couple of other alternatives, like a 529 plan or an IRA, but you may have a little different take on that. Would you like to just share that briefly?
When and you were speaking specifically on giving gifts to children or grandchildren or whatever, and certainly we all hope that we can do that for our children and grandchildren.
Sure.
Putting money into a college savings account, a 529 plan, is a great thing to do, or just money setting aside into an IRA or savings. But life insurance can be a nice gift as well,
It
because
can be.
God forbid we never want to think about having to have them use that, but what it can do is build cash value over time that can be used or borrowed against by the person who you give the gift to. And also, as health changes over time, if they have a family and find themselves in a situation where they want to protect your great-grandchildren financially, and they can't get life insurance, you've locked in that insurability for future generations.
Now, is
for
there
them.
a certain age that they need to be, or can you designate a beneficiary, say, as young as 2 years old?
My son had life insurance when he was about a month old.
Is that right? Okay.
And it's building value for college or down payment on his
Okay.
first home, or whatever the case may be.
So it may not necessarily be a bad thing then.
Might
It
not
could be a very
necessarily be.
positive, right?
Yeah.
But one that you really should spend a little time on
Absolutely.
doing a little research on, or talking to Amy.
It's
She's
whatever
the expert, exactly. So
fits
thank
your
you.
situation.
Yeah, thank you for
And I
sharing
think
that.
we covered a couple of other things on legacy and estate planning, Tim. You know, work with your attorney and your accountant and your insurance professional. Make sure that it's right for you and for your loved ones.
Sure.
I get a lot of people who say, well, I'm going to do this because my next door neighbor did it. And I'm going to do, you know, I don't want to even talk about that because the person that I work next to says don't.
Right.
That's great. You have to, you know, make a well-informed decision, but not everyone's situation is the same. So you don't know what's going on behind the scenes with that person and why they've made that decision.
Right.
So make your own decisions.
Very important. Good point. Good point. Well, we're getting ready to wrap up. I'm talking with Amy Aldrich from Aldrich State Farm in Glenville, New York. If you have any questions, send them right now, because we're only going to be on another 3 or 4 minutes here.
Okay.
Chat@cbs6albany.com is the email address. I'd like to conclude with one last question.
Yes.
And that is that seniors get so much information in the mail regarding insurance. Are there any tips that you have for seniors or for anybody that gets these solicitations and I guess a lot of it we probably term as just junk mail, but may not be. So what are your thoughts on
and
that?
I send some of that junk mail.
You do?
Absolutely.
Okay.
But you just, again, you have to make a well-informed
Yes.
decision. Don't be caught, and don't jump insurance companies for things like auto insurance. It's become quite a commodity, but it isn't necessarily, the benefit is not a commodity.
Right.
When you're getting things like life insurance,
Yes.
ask questions about, it might seem great up front,
Right.
but what are the small details? You know,
Sure.
what's the fine print?
Sure.
Does it go up? Is it less than stated benefit in the beginning? Does, do the premiums increase every year? Just dig into what happens now and what happens then, and make the best decision for you and your family.
Sure. So don't necessarily just throw it in the junk pile, but
No.
take a look at it and be very careful and use some
Absolutely.
common sense, and again, talk
Exactly.
to somebody who knows, who can help you, right?
Absolutely.
Right. Is there anything else that you'd like to share? Any last minute thoughts or comments?
I
or-
think what I'd like to share is that your insurance plan is very much based on your own needs and wants and
Yes.
budget.
Right.
And at the end of the day, like anything else, it's a priority as far as what you want in life for you and your family. And that's what you need to take into consideration, and find someone who's going to ask questions about your goals and your situation, and then present you with options, and you can make the
And you
decision.
make the decision, exactly. Wow. Well, Amy, thank you very much. This has been very valuable,
welcome.
very useful information. I know I've learned a lot. I'm sure our viewers have. So thank you so much for coming down. And thank you so much for logging in, everybody. And have a great week. And I will see you right here next Monday, same time, same place. Thank you. Bye-bye, everyone.